Good morning, Alex and friends. I'm Grace. Today is Friday, April 4th, 2025, and you're listening to Alex's News. The weather in Riverside today will see a high of 69.1 degrees and a low of 47.6. Coming up, we'll look into the reasons potential new tariffs linked to former President Trump are creating instability across global markets. We will also examine the significance of $30 billion in canceled medical debt and explore the arguments about why this relief measure may not fully address the broader challenges patients face. All this and more coming up on Alex's News. Stay tuned. We begin this morning with major economic tremors shaking the nation and the globe. President Trump's administration rolled out significant new import tariffs just yesterday, and the fallout has been immediate and dramatic. Joining us to break down these taxing developments is our news reporter, Ethan. Ethan, let's start with the basics. What exactly did the administration announce?
Grace, it's a sweeping move. According to analysis from Perplexity API and reporting from standardspeaker.com, the administration has imposed broad tariffs on imports from nearly all major U.S. trading partners. The Citizen's Voice reports this includes a minimum 10% tariff, but it could climb higher for specific countries, notably China and members of the European Union. It is a sharp reversal, as standardspeaker.com notes, of decades of policy aimed at lowering trade barriers.
A minimum of 10% across the board? That sounds significant. What's the administration's reasoning behind such a drastic step?
The stated goals, reported by both standardspeaker.com and Citizen's Voice, revolve around achieving what they call fairer trade. The idea is to pressure other countries, particularly those perceived as having high tariffs on American goods or unfair practices, into opening their markets more to U.S. exports. They're calling it a fair and reciprocal plan, aiming to boost domestic production and bring manufacturing jobs back home. Commerce Secretary Howard Lutnick expressed confidence this would ultimately level the playing field. Perplexity API analysis adds that the administration believes these reciprocal tariffs will help balance trade deficits.
Fair and reciprocal, but how are these rates actually calculated? Is there a clear formula?
That's a key point of discussion. President Trump asserted the rates are based on what other countries charge the U.S., claiming they're about half those rates. However, as Perplexity API points out, the specific calculations or models backing this up haven't been made public as of this morning. Similarly, the claim that this will eventually lower prices for Americans by boosting domestic production hasn't been substantiated with public data yet.
So a lack of transparency there. Meanwhile, the market certainly didn't wait for the data. We saw a massive sell-off yesterday.
Massive is right. It was a truly tariff icy tumble, Grace. Both Citizen's Voice and standardspeaker.com reported yesterday was the worst day for U.S. stocks since the pandemic-related crash back in June 2020. The Dow plunged nearly 1,700 points, or 4%, according to Citizen's Voice. A Perplexity API cited over 1,300 points. The S&P 500 dropped 4.8%, and the Nasdaq fell a staggering 6%. Citizen's Voice noted investors fear a, quote, toxic mix of slower growth and higher inflation, hitting sectors from tech to retail hard.
And this isn't just a domestic issue. The ripples are global.
Absolutely. WFTV headlines this morning confirm slides on Wall Street continued, and global markets followed suit after China announced its response. Citizen's Voice and Perplexity API reported downturns in major markets across Europe and Asia: France, Germany, Japan, Hong Kong, South Korea, Australia. They're all feeling the impact.
Despite this market mayhem, President Trump seemed quite upbeat.
He did. According to Perplexity API sources, and also noted by Citizen's Voice, President Trump downplayed the market reaction, stating yesterday, "I think it is going very well. The markets are going to boom. The country is going to boom." So, there's a stark contrast between the administration's public confidence and the immediate market panic.
And speaking of panic, economists are sounding alarms about the potential impact here at home. What are they predicting?
The predictions are quite grim. The Yale Budget Lab, cited by StandardSpeaker.com, estimates these tariffs could cost the average American household $3,800 just this year, and potentially push inflation over 4%. Analysts at UBS, mentioned by Citizens Voice, see U.S. economic growth potentially shrinking by 2%, with inflation nearing 5%. We're already seeing real-world effects. StandardSpeaker.com reported automaker Stellantis is halting some production due to tariffs on imported cars, leading to layoffs in Michigan and Indiana.
And China, a major target of these tariffs, has already fired back.
Swiftly and significantly. WFTV and Perplexity API confirmed that today, April 4th, China announced its own retaliatory tariffs, a 34% levy on all U.S. imports, set to take effect in just 6 days on April 10th. This is expected to hit American agriculture, soybeans, beef, pork, plus manufacturing, and potentially tech, especially if China restricts exports of rare earth elements vital for electronics. It's a major escalation in the trade war.
A trade war indeed. It seems we're just at the beginning of understanding the full impact of these tariffs. Ethan, thank you for laying out these complex details for us this morning.
You're welcome, Grace.
We turn now to a story that hits home for millions of Americans struggling with healthcare costs. There's been a massive development in the fight against medical debt, a burden weighing heavily on so many families. Joining us now is our news reporter, Chloe, to break down this major deal. Chloe, $30 billion is an eye-watering figure.
It really is, Grace. The national nonprofit organization, aptly named Undo Medical Debt, has just finalized an agreement to acquire and completely wipe out $30 billion in medical debt. Reporting from WUSF and KERN News confirms this staggering amount, which is expected to bring relief to about 20 million people across the country. ITA is a significant step towards alleviating what many feel is an undue burden.
20 million people, that's incredible. Where did all this debt come from? Was it directly from hospitals?
That's a great question. According to the reporting, Undo Medical Debt actually purchased this massive portfolio of debt from a company called Pendrick Capital Partners. Sources consulted via Perplexity API identify Pendrick as a major for-profit player in this space. These types of companies often buy large amounts of older debt, what the industry calls aged accounts receivable, from healthcare providers, usually at a steep discount. KERN News even suggested the seller might be a debt trading company looking to exit the market, possibly referring to Pendrick, though we couldn't get specific confirmation that Pendrick is leaving the medical debt business entirely.
So, Undo Medical Debt paid Pendrick for this debt? How much does it cost to buy $30 billion worth of debt? It sounds like a costly operation.
You'd think so, but this is where the model gets interesting. Based on figures reported by WUSF and analyzed by Perplexity API, Undo Medical Debt spent $36 million to acquire the $30 billion face value portfolio. That works out to buying the debt for about 0.12 cents on the dollar, incredibly cheap. WUSF also notes they've budgeted another $40 million just to handle the process of forgiving the debt and letting all 20 million people know the good news.
0.12 of a cent on the dollar. That's pennies, literally. So for the people receiving this help, what does it mean? Is it mostly small bills, or does it cover larger amounts too?
It varies quite a bit. WUSF reports the average amount being forgiven per person is around $1,100. But within that average, some individuals have debts reaching into the hundreds of thousands of dollars. The most immediate impact for all of them is that the collection calls and letters associated with these specific debts will stop. However, WUSF also pointed out that the relief isn't evenly spread nationwide. It's heavily concentrated, benefiting residents primarily in Texas and Florida.
That's life-changing for those individuals, certainly. But you hear numbers like 100 million Americans dealing with medical debt. Even $30 billion, as huge as it sounds, feels like a drop in the ocean. Is this really solving the problem?
That is the crucial point, Grace, and even Undo Medical Debt acknowledges it. As WUSF highlighted, with an estimated 100 million Americans facing medical debt, this $30 billion cancellation helps significantly, but it only addresses a fraction of the total issue. Critics, as mentioned by WUSF, sometimes call these efforts a band-aid on a much larger systemic problem. Even supporters see it as just one piece of the puzzle. It doesn't stop new debt from piling up.
So why would a company like Pendrick Capital Partners sell this debt for so little, especially to a nonprofit that's just going to erase it?
That is the multi-million-dollar question, or perhaps the $36 million question in this case. Pendrick hasn't made public statements about their specific reasons. However, analysis based on Perplexity API suggests several possibilities. It could be financial aid maybe. These debts were old, hard to collect, and simply not worth pursuing further. Selling them off, even cheaply, might have been the best financial move. There could also be PR and regulatory factors. With more scrutiny on debt collection and potential moves by agencies like the Consumer Financial Protection Bureau to get medical debt off credit reports, selling it for forgiveness might help Pendrick avoid headaches, negative press, and legal issues. The quality of the debt itself might have been low, and, though speculative, there might even be potential tax advantages for Pendrick.
It sounds complex, with many factors potentially at play behind the scenes. It's clear this single action, while monumental for millions, isn't the final cure for the medical debt epidemic.
Exactly. Undue medical debt hopes, according to WUSF, that this large-scale cancellation shines an even brighter spotlight on the crisis. They want it to spur policymakers towards more comprehensive, long-term solutions, things like ensuring hospitals provide the financial assistance they're supposed to, and tackling the high healthcare prices that lead to debt in the first place, even for people with insurance. This effort provides immediate relief, but the push for systemic change continues. This information comes from reporting by WUSF, KERA News, and analysis using Perplexity API.
A truly significant story with far-reaching implications. Chloe, thank you for breaking that down for us. Okay, here are some other headlines. In the Pacific Northwest, lawmakers in both Oregon and Washington are considering legislation to provide unemployment benefits to striking workers. Oregon's proposal is notable, as it could be the first state to offer such benefits to striking public employees, with eligibility starting after just 2 weeks off the job. This comes after recent high-profile strikes involving nurses and teachers in the state. Meanwhile, in Washington, a similar bill aimed at private sector workers has cleared the state Senate but faces opposition from Republicans and business groups in the House. Currently, only New York and New Jersey offer such benefits, though several other states are exploring the idea. Proponents believe it balances power, while critics worry about prolonging strikes. Turning to federal programs, the Trump administration laid off the entire staff managing the Low-Income Home Energy Assistance Program, or LIHEAP, on April 1, 2025. This affects about 24 employees and is part of broader planned cuts at the Department of Health and Human Services. LIHEAP, which helps over 6 million low-income households with heating and cooling costs, still has about $378 million in allocated funds yet to be distributed. The move has raised concerns among state officials and bipartisan members of Congress about the program's stability and the timely release of remaining funds, especially with summer cooling needs approaching. Senators have urged Health Secretary Robert F. Kennedy Jr. to reverse the decision and have invited him to testify. In Texas political news, Attorney General Ken Paxton is reportedly gearing up for a potential 2026 Senate run against incumbent Republican Senator John Cornyn. This follows the recent revelation that a federal bribery investigation into Paxton was dropped late in the Biden administration. Paxton, a staunch Trump ally known for challenging the 2020 election results, currently enjoys higher approval ratings among Texas Republicans than Cornyn. The two have a strained relationship, with Cornyn previously calling Paxton's legal troubles an embarrassment. Despite facing other legal challenges, including settling securities fraud charges and surviving an impeachment attempt last year, Paxton remains a resilient figure among the party's hard right base. Overseas, the motivation behind former South Korean President Yoon Suk-yeol's controversial martial law declaration last December continues to be scrutinized. Yoon cited political deadlock and accused the opposition-controlled National Assembly of, quote, anti-state activities. The declaration, which suspended political activities and led to military deployment, was seen by critics as an attempt to sideline opponents amid budget disputes. Although Parliament swiftly overturned the martial law order within hours, the action triggered widespread protests and international condemnation. Ultimately, it led to Yoon's impeachment, which was upheld by a court on April 4, 2025, permanently removing him from office for violating the Constitution. He now faces criminal charges for rebellion. And in Washington state, an ICE raid at Mount Baker Roofing in Bellingham on April 3 resulted in the arrest of 37 individuals. Officials stated the raid was part of an ongoing criminal investigation into the company allegedly employing undocumented workers who used fraudulent documents. The operation involved ICE, Border Patrol, and Customs and Border Protection air and marine operations. The arrests have sparked mixed reactions locally, highlighting community fears and the ongoing debate surrounding immigration enforcement and labor needs in industries like roofing. Those detained were taken to the Northwest ICE Processing Center in Tacoma. That's all we have for now. Today's episode was made by Alexander King, with Claude Sonnet 3.7, Gemini Pro 2.5 Experimental, Gemini Flash 2.0, Perplexity Sonar, Perplexity Sonar Pro, and Google Cloud Text-to-Speech. I hope you have a great day. I'll see you tomorrow, Alex.